Welcome to The Explainer. Today, we're digging into the 2025 results and 2026 outlook for BSH, Europe's biggest home appliance manufacturer. And it's a fascinating story about fighting through a tough market, dealing with a really strange regulation, and betting big on tech to pull ahead.
All right, let's just jump right in with one number, 12 euros. Now I know, doesn't sound like a lot, right? But believe me, this small number is at the very center of a huge challenge facing European manufacturing right now.
And get this isn't some what-if scenario. This is the reality for BHS today. It's a classic case of a policy that sounds good on paper, but is creating a real-world competitive nightmare. And honestly, you can't understand BSH's strategy without getting a grip on this.
So here's how we're going to tackle this. First, we'll look at how BSH actually performed. Then, we'll get into the weeds of that regulatory problem. And finally, we'll see how the company is planning to fight back. And just so we're all clear, everything you're about to hear, it's all based on official, public data straight from BSH itself.
Okay, first things first, let's set the stage. Because to put it mildly, 2025 was a rough year for the entire home appliance market.
BSH was dealing with a perfect storm, really. You've got slowing housing markets, so fewer people buying new appliances for new homes. Interest rates stayed high, making folks think twice about big purchases. Plus, we were all watching our wallets a lot more closely. And to top it all off, competition, especially from Asia, was getting fiercer by the day.
But on top of all those general market headaches, BSH has been calling out a very specific and very expensive problem that's unique to Europe. It all comes down to a policy called the Carbon Border Adjustment Mechanism, or CBAM for short. Now, the idea behind it is totally logical. It's supposed to put a carbon price on some imports to make sure European companies who are already paying for their emissions aren't getting undercut. It's meant to stop what they call carbon leakage.
Okay, but here's where it gets kind of crazy. There's a giant loophole. So BSH imports raw materials like steel to build its appliances in Europe, and they have to pay the CBAM tax on that steel. But a competitor can build their entire appliance outside the EU, import the finished product, and pay nothing. The tax hits the raw materials, but not the finished goods. Wild, right?
And that is where our 12 euros come back in. BSH says this loophole creates a cost disadvantage of up to 12 euros for just one washing machine made here in Europe. Now think about that. For a lot of these appliances, 12 euros is the entire profit margin. Poof, gone. All because of this one little regulatory quirk.
So yeah, you can imagine the company is not happy. The COO, Lars Schubert, put it pretty bluntly. He said, quote, "That's a huge problem for us, but the EU Commission has ignored us so far."
So what do you do when you're facing a tough market and a regulation that's working against you? Well, BSH isn't just sitting around waiting for politicians to fix it. Nope, they are doubling down on the one thing they can control, innovation.
And I mean, they are putting some serious cash on the table. In 2025 alone, we're talking a whopping 847 million euros poured into research and development. This isn't just tinkering around the edges. This is their core strategy for survival and growth.
And this isn't just some abstract number either. We're already seeing what that money can do. At the big Euro Cucina design fair, BSH was showing off some seriously cool stuff. I'm talking a robot vacuum that hides itself in your kitchen cabinets, an oven with an AI camera built right in, even a tool that uses AI to turn any recipe you find online into step-by-step instructions. They're going all in on smart tech and efficiency.
All right, so let's check the scorecard. How did all of this, the challenges, the innovation, actually play out on the balance sheet for 2025?
Well, despite everything we just talked about, BSH still pulled in 15 billion euros in revenue. Yeah, it was down a little bit from the year before, but honestly, in this market, that shows some serious resilience.
But the story really changes depending on where you are in the world. Here in Europe and in North America, they actually saw a little bit of growth, which is pretty solid, all things considered. Emerging markets did well too. The real tough spot, though, was Greater China. Sales there dropped by over 7% because of a really weak market.
And you can see that weakness from China reflected in the product numbers. Cooking and dishwashing appliances did great, but refrigeration and laundry took a hit. And the company points the finger directly at that super competitive market, especially over in China.
So after a year like that, what's the outlook? What does BSH think is coming next?
Well, the CEO, Matthias Metz, is being pretty realistic about it. He's basically saying, hey, don't expect things to get better overnight. The message is that it's going to stay tough out there, but they believe their strategy, focusing on innovation and quality, is the right way to navigate through it.
And that really brings us to the big picture question, doesn't it? BSH is in a race, plain and simple. They're betting that they can innovate their way out of this mess, that they can make products so good that they can overcome a tough market and a bad regulation. So the real question is, can technology actually move faster than policy?
So there you have it. That's our breakdown of where BSH stands. We'd love to know what you think. What's the right move for European manufacturing right now? Drop your thoughts in the comments below. And hey, if you found this useful, make sure you subscribe for more.
Disclaimer: this channel is managed on a personal and independent basis. The opinions and analyses expressed are personal and do not represent in any way the employer of the channel manager or any company in the household appliances sector.